Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session in the Forex training room for July 18th, 2021. We will be going through our standard agenda, look at the prior week's results, our currency strength meter, fundamental announcements, look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting with the ledger, we are a little bit worse off than last week on closed trades, but we do have a number of open trades, 6 if I'm not mistaken, that are ending the week at a significant profit. And more importantly, they are trending in the right direction. We're starting to catch some trends. So I'm pretty sure that by the time next week rolls around, that negative is going to be a positive. So that's how strongly the market is starting to move on trends. We will, of course, not have anything firm until these trades get closed out, and we don't know how long these trades will run. Indeed, they may run beyond this week, and thus we won't be closing out trades. So we'll see what happens. We do love a good trend. On the intermediate, a reasonably flat week. We got taken out of one trade at a loss and got taken out of another trade at a small win. So we are down a few points, but not a big deal. And on the short-term account, we actually traded quite a bit. We had 4 trades opened and closed throughout the week, but they came in at within cents of each other, positive and negative. So we had 2 winners and 2 losers. And when you add them up, we pretty much changed nothing. So perfectly flat week on the short-term account. Notes and opportunities for improvement. As I mentioned, some trending is starting to get traction. So we will be hopefully looking for some nice gains on the long term. Inflation fears in the U.S. are rising as Biden and the Democrats unveil a $3.5 trillion infrastructure, and I put the word infrastructure in quotes for a reason, plan. There is only about $1 trillion in this infrastructure plan that can be conceivably called infrastructure. Everything else seems to be the usual pie in the sky, social re-engineering programs that the liberals love. I'm sorry, you can tell which side of the divide I'm on based on my speech patterns. And well, it is what it is. I don't agree with it, but that is what is happening. And they do hold the White House and a majority, a very, very slim majority, thanks to the tie-breaking vote of Vice President Harris in the House. So it's not sure if they're going to manage to actually push this one through. It's still up in the air, but it will be a massive spending, and only a fraction of it could be called infrastructure. So pumping all that money into the economy is sure to spark inflation. And I wouldn't be surprised to see the stock market reacting early this week to that news, which came out rather late, and some of it over the weekend as to what was going on. So stay tuned for that. And of course, it will help our trending across the board. The Forex market tends to react a little bit contrarian to the stock market. So we'll see what happens. But that should be your main concern right now is these plans from the Democrats to just print another $3.5 trillion on top of all the printing that we've done in the past 50 years. So there you go. That's what's happening. Relative strength meter for the week that just ended. We had the euro come out even. It lost ground against 3 currencies. It won against 3 other currencies, making it even. And the tiebreaker was a draw with the Swiss. It ended up sideways. The dollar, however, had a winning week. It had 5 gains over other currencies and 2 neutrals. No losses for the dollar. The pound had 5 losers, 2 winners, so didn't fare well, but didn't fare too poorly either. It still managed to eke out gains against the CAD and the Aussie, but it's starting to look a little bit sluggish. The yen did very well against everybody except the dollar and the New Zealand, in which cases it was even. So definitely a win for the yen. That's been a long time coming. Now let's see if they can sustain that. The Canadian was one of the main losers of the week, being red across the board, except with the Australian where it tied. And of course, I don't have a really good explanation for why the CAD is weakening as oil prices continue to boom. Obviously, the Canadian economy is not just oil, but oil is a huge component of what drives that market. So the market in general probably knows a little bit more, is concerned about some other things beyond oil, and punished the Canadian accordingly. Or perhaps it simply moved too quickly in past weeks and now it is consolidating. We'll have to wait a couple of weeks more to see what happens. But particularly against the dollar, the Canadian is in a full-blown rout right now. The Swiss was even, winning 3, losing 3, and tying on the 7th. Australian was the other loser for the week, red across the board, except with the Canadian where it tied. And the New Zealand, one of the other winners, green, except for a couple of pairs where it tied. The dollar and the yen were ties. Everything else, the Kiwi blew away. So that's where we are with our relative strength meter. I want to issue a reminder here that all these charts and stuff that I always present, they look backwards. There is no such thing as a forward indicator. Any indicator, any chart, anything that I can whip up that's based on actual prices and volumes and whatnot is always backward facing. I can tell you what happened. I can never tell you what's going to happen. I can infer in some cases, a trend will continue until it bends or ends or whatever, stuff like that. But there is no predicting in any market. So just keep that in mind. Our calendar for this week is pretty light. We have the Reserve Bank of Australia's meeting minutes tomorrow night. So we will be having our Monday trading session, later than usual, probably around the 9:15 p.m. U.S. Eastern Time. And on Thursday, we have the European Central Bank's interest rate decision, which is at 7:45 a.m. There is no expectation, no reasonable expectation that the European Central Bank is going to change the rate. So we are not going to bother getting up that early to hear them say that it remains at 0. Instead, we will get up for the monetary policy statement and press conference happening at 8:30 a.m. U.S. Eastern Time. So a little bit before 8:30, we will be opening up the trading room and see if we can get anything out of the euro. That's it. That's it for the week. Nothing else happening as of this time. With that, we move into the charts. Oil slipping very slightly, getting about to the 72 level, whereas it was a little bit above 75. This is not a retracement at all. It's simply gone sideways, and too soon to tell whether it's going to continue gaining or it's going to drop. Now, OPEC is having meetings trying to control supply, demand, pricing, whatnot. It doesn't look like that's going to be working. We'll see. Anyway, it may continue rising. Stay tuned for that. But obviously, nothing is a given. Now, on the other hand, take a look at that chart with oil at multi-year highs right now, and the Canadian having its worst week in quite a while last week. So it doesn't make a whole lot of sense, but it is what it is. Moving on to the currencies, the euro dollar had a pretty bouncy week. Ultimately, the dollar won, but it didn't win by a whole lot. It's still more in a sideways pattern and above support than anything else, but significantly off previous highs. I mean, it went as high as 123.5. And now we're trading a good 550 pips below that. So That is 5.5 cents. That is a very significant move between the end of last year and today, 7 months later. It's still not a given that the euro will continue losing ground, but it's not looking pretty right now. The pound, on the other hand, is in a sideways channel, which it entered all the way back at the beginning of the year, somewhere around the first or second week of the year. It crossed the 137 line there on your screens. And since then, it's been bouncing between that line and 142 pretty consistently. Right now, it's at the bottom of that range. So the pound has not given up the ghost yet. It's simply gone sideways now for months. We'll have to wait and see if we get a breakout in either direction. Until that happens, I would continue trading the channel bounces. So long as it stays within the channel, trade the bounces. So we're going to be looking for opportunities to trade it back up if it bounces, or to trade it down if it breaks. USD/JPY also going sideways right off the top. So it looks like the worst for the yen is over. It ended up tying with the dollar this week. So no net gain or loss for the yen against the dollar, but it's still at the very top of the chart. So an extreme weakness for the yen against the dollar, again, for no significant reason. However, the trend line has been broken. So that bullish trend line we were following since the end of last year is now officially broken. And that means that we could see a trip downstairs. It's still above the clouds, so keep that in mind. But on a Kumo cross, we will be starting to pile into the USD/JPY. USD CAD is now the opposite. It's now looking for Canadian weakness against the dollar. So imagine how bad the CAD is performing if it's losing against the dollar that has nothing really to show. And it's broken through 3 levels of resistance. It just keeps going, both diagonal and horizontal resistance, and it is still rising. I would expect that to continue. A trend is now being established. Remember what we said? A trend is your friend until the end. This trend has not ended. The prior trend, however, has ended on this breakout. So now we are officially trading the USD CAD up. USD Swiss is still fighting it out, bouncing between above and below that dropping trend line. So it is in a downtrend that is in the process of being broken. Now, the Swiss should be gaining strength, but it isn't. It's going in the opposite direction and has now gone sideways and staying above support. If it does break below, we should have a good opportunity for quite a number of pips, but we have to wait for that move to actually begin. Aussie dollar, the Australian, is now officially in a reversal, breaking multiple levels of support and should be traded down. The Kiwi dollar, on the other hand, is still not giving up that ghost. It has broken significantly from its previous highs, but support is holding at the 69.25 level, give or take, that red line right above where current price is. It is now in a sideways channel between there and the 71, which means there's about 175 pips between the 2 walls of the channel. That is definitely tradable, but right now it's in the middle, so we have to wait to get a better entry for the Kiwi dollar. Aussie Canadian is still at the bottom of the chart, and even though the CAD had one of its worst weeks in ages, not against the Aussie, it tied. So we've got a neutral sideways market playing out in the Aussie Canadian. Euro Swiss breaking support this past week, or maybe the week before, and staying below that now new resistance, but still hugging that horizontal. So it's not moving away. It could still go in either direction, but it's now officially, of course, in a downtrend. Euro pound breaking support and then popping right back up. We did get taken out of a trade, unfortunately, on the euro pound as a result of that break. And now it is heading in the opposite direction. We're in no rush to re-enter the trade, but if it does break the cloud, we will start piling in. Euro JPY, we're already in this one, and we're carrying significant profit on the long-term account as it breaks support, and it still has quite a ways to go. Again, the yen gaining strength against everybody except for some reason the dollar, where it broke even. I think it didn't do much against the euro. 1, 2, 3, 4, 5. No, it actually did. So we do have the yen gaining on the euro to some degree, but we're still waiting for a break of that support exactly where it ended the week on Friday. So I still think it's going to go lower. We have the entire chart there to go low. So we'll wait it out and start protecting profit as early as tomorrow. I will be reviewing what happens overnight, Sunday into Monday, and taking action on those trades that we have open on the long-term account, adjusting stop losses and whatnot, but not tonight, not on a Sunday. There's still too much bounciness as the week begins to warrant doing that. Tomorrow, when the market is settled down a little bit, I'll start protecting profit. I don't want to protect too much, and I don't want to protect too little. So it's going to be a balancing act. Euro Canadian, again, the Canadian in a rout, and that happened here with the Euro CAD as well. And we are also in this trade. More importantly, it is crossing the Ichimoku cloud. So we may have the opportunity to trade it higher and higher and higher. We'll have to wait a day or two as this week kicks off, and we may start playing this on the other accounts as well. Pound JPY going sideways, hanging out between support and resistance between the 153.35 and the 150.50. So that is a bit of a 200 and something pip range there, almost 300 pips between the two. And no telling which way it's going. It has crossed the Kumo, so officially we are in a bearish movement, but it's still too close to call. So we'll wait a little bit more before we say anything. We do have a trade open on the pound JPY, which is very likely going to take us out between today and tomorrow. It's just that's the way it's moving. I'm not going to close it out early. I'll let it play until it's stop loss, but it's not looking good. Aussie JPY is breaking support, so we are seeing a move towards the bottom. If it breaks that next level of support, we're going to be going in on this one, all guns blazing, as well as it breaks everything. So looking forward to that as we see Aussie weakness. And if we pair that with yen strength, which should be coming into play, we will have a brilliant opportunity for hundreds of pips. Euro New Zealand is pretty sideways, I would say. It's still respecting support. It is in a sideways channel. And as I mentioned last week in one of our sessions, and I did open a long position on the Euro New Zealand, it is bouncing between the sideways channel walls, and it's now near the bottom. Time to trade it back up. I figure that's a pretty good option here. We'll see, of course, if it pans out, but so far it is looking good. Pound Canadian, again, the Canadian just in a rout, and against the pound, it had no chance at all. Just hundreds of pips of movement with a little bit of a retrace on Friday, but it's tracking higher and higher. Pound Swiss is perfectly sideways. It's within a channel inside the wider channel. So we have a little bit of an inside channel working out there. It's sticking close to the bottom of the cloud. So we do have a Kumo cross, which is a bearish trigger or entry signal, but it hasn't moved much. And indeed, it retraced somewhat this week. It's more sideways than anything else. I'm going to wait a bit. I still feel that this one will probably move back up at some point, but until it starts doing so, I'm leaving it alone. And Pound Aussie, unlike the Pound Swiss, is moving quite nicely. It's in breakout territory. We're already trading this, and we're carrying significant profit. We'll have to wait and see if we carry even more significant profit as this week kicks off. As I said, sometime tomorrow, I will be revising stop losses and whatnot and starting to protect profit. That's it for our charts. Setups we see in progress. Of course, the pound still fighting the good fight and winning against a number of other currencies. The USD pairs The USD winning out against a number of oddly weaker currencies. I say oddly because I see no reason for the Canadian or the yen to be weakening against the dollar, but they are. You cannot fight reality is simply what they're doing. The Australian pair, the Australian dollar is officially retracing. I warned about this for months. It's happening, people. So we're now officially in Australian weakness. The yen is starting to find support. It did pretty well last week, but 1 week means nothing. So I have to wait and see if this is the beginning of a longer movement or just the regular ups and downs of a weakening currency. Until it does turn around, the yen is a weakening currency. And last but not least, the Canadian dollar. The Canadian is in a full-blown retreat. No idea why. Did it move too much? Did it move too fast? Or is this a sign of a deeper market concern? No way to tell. Stay tuned. But for now, the Canadian is weakening and we are trading it that way. And some parting words, the trend is your friend. I say that pretty often. I highlight it here, not all the time, but enough so that people don't forget. And we are seeing some wonderful breakouts and trending in quite a number of crosses in the Forex market. This will very likely result in a boost to our long-term account. That's just the nature of the accounts. That account is uniquely positioned to take advantage of this kind of market environment. And we will have to see, of course, how we can make this current market work for the lower time frame accounts, the intermediate and the short term. I know we've not been having a good run on these, and of course, all that is subject to trade engineering. So we'll be trying to adapt those two accounts to the current market and see about recovering a little bit or even completely before too long. And remember, all trends do and no trend lasts forever. It's all cycles. So milk the trend for all it's worth while it's still there, and then let it go. Be zen. Let things go. And on that note, I will let this session go. Any comments or questions from anyone? Okay, then thank you very much, folks. That is the end of this start of the week. I will be, of course, posting this as I normally do. And I will talk to my subscribers on Monday. The rest of you, see you next Sunday. Bye-bye.